The Federal Reserve raising interest rates is driving up the cost of borrowing money on everything from car loans to home mortgages. Freddie Mac says the 30-year fixed mortgage dropped to 6.95%, but that's still more than double what it was just 1 year ago. And that means on a $400,000 loan, your monthly payments today would be more than $2,600. That's nearly $950 more compared to last year. CBS's Lilia Luciano has tonight's Money Watch.
Terry Arena just received an offer for her home well below asking price.
What concerns you as a seller?
That there aren't going to be as many people out there with the same buying power.
Home sales in this part of Long Island are down more than 22%. It's been happening all across the country over the last 8 months, the longest slump since the start of the housing crash in 2007.
And that's why I made that decision to put it on the market now, because if I wait till the spring, it definitely will be lower. So why not try now, even though the interest rates came up?
But her broker, Eric Stutz, says though prices are down, they're still way higher than before the pandemic.
What advice do you give? Sell now?
I think it's still a great time to sell now, but going forward, the market is definitely trending down, and I expect home prices to continue to drop well into next year.
That's because rising mortgage rates are shrinking the number of people who can get a loan and buy a home.
A lot of buyers have either dropped out of the market and are sitting on the sidelines. Some of them are even relocating.
Charlie Doherty at Wells Fargo says it's all by design. Would you say that the housing market is just inevitable collateral damage to reduce inflation?
The Federal Reserve is cognizant of what's happening in the housing market, but they're willing to let the housing market go under a correction if that means inflation is going to come down.
Which means more cooling on a once hot housing market. Lilia Luciano, CBS News, Baldwin, New York.